Hello everyone, welcome to the Elliott Wave YouTube channel. Today is August 26th, and the chart of the day for today is the dollar index DXY, 60 minutes time frame, shorter time frame. As always, we're going to be talking about the primary view and also the general structure as educational purpose, and also target for the dollar index, as well as alternate views. Okay, so first of all, you can see in the 1 hour time frame here, we finished with 1 here in the minor degree, and with 2 completed here at 98.80. Okay, now you can see that we have turned lower last week and broke below that previous low here. So it is actually a low sequence in a way. So that means we are within with 3 to the downside in the minor degree. Within with 3, we finished with 1 of 3 here. This is with 2 of 3. All right, so let's take a look at the general structure here. Now this is a bullish 5 ways up. Now in this case, this is a bearish 5 ways down. So this is kind of the inverse of this, right? So instead of 1, 2 here, this is 1 is going down, and 2 is, instead of pulling back down, is pulling back up, like what we are seeing here, right? This is wave 2 here. So this wave 2 here is the same as this 2, but the other way, because again this is a bullish impulse. A bearish impulse will be exactly 5 ways down here, right? So you can see we are within wave 3 down instead of up here. Again, it's the inverse because it's a bearish move here. All right, and yeah, so we're looking for the downside as long as it stays below 98.80, which is a pretty straightforward idea. Now let's take a look at a couple of different things here, so that you have an understanding where we are, what the alternates are, and why we are calling what we are calling. All right, so let me upgrade to the 4 hour time frame and look at the minor degree here. Okay, so this wave 2 here is this wave 2 here. Now remember, we have a full count in our member area. If you want to see all the counts, you can always try our service. We have 14 days trial for only 99 cents for new members. Use the link in the description of the video. So this wave 2 right here, right? And we're looking for wave 3. Like I mentioned before, we managed to break below the previous low, which is this wave 1 low here. So let me copy this into the 4 hour time frame. So we got wave 1, wave 2. Now this is a spike that is not really, it's not real. This one actually is not, it's just a bad data. So we have from the August 1st what looks like a 5 swing down, 1, 2, 3, 4, and then 5. Again, this is a bad take, it's not real. So 1, 2, 3, 4, 5, ending 1 diagonal, 2 finish here, and then we break below 1 again. So we have a low sequence, right? We got a 1, 2, and then breaking below that 1 again. Now from the minimal point of view, then you're going to be looking with 3 equal with 1, which is this 97.26. so that will be actually our minimum target on the downside, with a bearish bias, as long as we don't break above 98.80. And simply it's because we broke below that previous low and creating a short-term low sequence, and that's the reason our primary view is this way. Okay, now a couple of different things we can take a look at just to give you some ideas. When you look at this rally from July, which ended in August, you can clearly see what happened here. This rally was a very clear 3 waves. So this itself, guys, if you don't see anything else, when you just simply look at this, and this is favoring more downside because the rally is corrective. If you know, if dollar index is bullish, it would have been 1, 2, right, and then 3 like this, extended to 1.618, and then 4 and a 5. But the fact is that it turns lower only after 3 waves, and that this third leg doesn't even have extension in the 1.618. So as you can see, this is the 100% to 161.8%, doesn't have any extension, turns lower. So this itself is already telling you, okay, so the bias is lower, right? with higher probability we should continue to go down. However, yes, it does react lower, but it has not broken below that previous low yet, right? So that means until it breaks below the previous low, well, then what happens is you can always do what we call a double correction, in which this ABC and W here, and this could be X. Now, there are a couple of different, I will tell you now what the alternates are. The first alternate is that this is not a 1, 2, let's say this is AB, and then you go down here to the 100% extension area of this AB, which is what we mentioned earlier, 97.25 is the minimum, and you finish C here, maybe think of it like this, 5 ways down from the B, 1, 2, 3, 4, 5, and then go higher again. Now, in this scenario here, you're still gonna, the current forecast is still gonna be correct. It's gonna go down with a minimal target of 97.25, but the difference is that you're not going to be extending lower in a 5 ways down, which eventually can break below the low, but it's just going to be ABC and then bounce again, and because this one is W, this one X, and then you're going to have a big Y leg up. So that will be first alternate, which really doesn't matter from the short-term point of view because you're going to eventually get further downside anyway. Okay, now the second alternate is the following. So you also got a B, but then the C is truncated. The C truncated here. So then in that case, you are not going to go down, and it's just going to go up right away like this, right? So you finish ABC, this is W, this is X, and then you're going to be looking for more upside. Now, why don't we call this? Well, because we don't call truncation, especially when we know the right side is lower. How do we know the right side is lower? Because this bigger degree rally is 3 ways. So there is no reason for us to call a double when we know the right side still remains lower. When especially shorter cycle, we have a lower low, we're calling for the downside. It's just the way we forecast is always in the direction of the right side in the more aggressive way, right? Now we understand there can be an alternate in which WX truncated C and then higher, or even something like this. We understand all the possibility, guys, right? There could be an expanded flat from here, A, B. Again, we don't call an expanded flat. There's no reason for us when we do have a lower low in the shorter cycle and the right side is lower that we call something like this. That's not the way we forecast in EWF, right? We don't call expanded flat unnecessarily just because to force certain bias, right? So we can do something like this, so in which basically this is ABC, and then and then you're gonna be looking to break above that peak 98.80, only to sell off again afterwards because this is an expanded flat. But again, we don't call expanded flat without any very good strong reason, no reason at all at the moment that we see. So again, the primary view is looking for the easiest path, the most natural path for the dollar index, which is calling for more downside below 98.80. Okay, so that's the update for today, guys. I hope you enjoy it, and again, it is about explaining why we are labeling what we are labeling instead of presenting you this is it, guys, this is the only count, because there are a couple of different paths. I'm presenting you why, the thought process behind the count. Okay, so I'll see you all again next time, and have a nice day, everyone.